Okay, guys, sorry about the wait. I actually was on an important call that I had to make, and just, I couldn't get off that call, so I just, sorry about that, but thanks for your patience. I wanted to do this video today, this live stream, because I got a lot of comments for charts that people were requesting on various stocks. So rather than me do a second video today and put out those, I wanted to just cover those in this live stream. And then also the markets, I think the market's setting up for something that I want to just kind of look into, and we can kind of look at different charts, but seems like we're kind of set up in a way for the market to make a bigger move. And some of the selling based on the rates, it's all based on the Fed minutes and the rate hikes, and the market's potentially going to try to start front running those rate hikes. That whether the Fed does the rate hikes or not, it's all about just the market front running what they're saying the Fed's going to do. And so the market can sell down based on the hypothetical rate hikes that never take place, and then the Fed could basically back off those rate hikes after the market's sold down and say, we're going to taper back on these. I think that's the whole intention of the Fed right now, is to kind of talk down this inflation trade. So basically, the Fed's pivoting quite a bit, and inflation's running hot. It's official. Everybody knows. If you guys haven't looked into the inflation thing, maybe do a little research, but basically inflation right now, the official reading's like 6.8%, but then like 30% of that calculation comes from what's called owner's equivalent rent, which is the government calls homeowners and asks them what they would rent their house out for, and then the homeowners make up a number, they jot that down, they take a bunch of those surveys and add it in. Well, homeowners don't necessarily know what the market rents are for, or what the market rates are going for, so they kind of make up a number what they think it is. Well, the homeowner's rent right now they said it year over year was like a 3.5% gain, and that's 30% of that inflation number. So anybody who either rents a home or owns a home knows that, you look at your appreciation and your market, I guarantee that your market is probably increased in the cost of homes or the cost of rent by more than 3.5%. And that's pretty much true across the country. So the real inflation is much higher, but the government needs to kind of keep that under wraps because they have to pay cost of living adjustments for Social Security, things like that. And so it can get out of hand if that number, is too high. So the Fed's trying to fight this inflation, and so that's why you saw those minutes come out. They were hawkish, saying they're going to start reducing their balance sheet and start hiking rates a lot more than what the market was anticipating. I think the Fed, I think it's a lot of talk, and the Fed's really just purposely trying to spook the market, to talk the market down, because the thing is that you get these commodities to sell off, you get oil to start to sell off, you get that to kind of come down a little bit, and that's all the inputs that go into prices, and that can potentially help taper down this inflation a little bit. I think that's the goal, but regardless of that, let's look at the charts, and we'll start getting into what you guys are, any kind of requests you guys want to make at charts, then throw it in the comments, and I'm just going to go down the list, go off, probably go for 20 minutes or so, and then we'll wrap up. Okay, so any questions you guys want me to answer? I mean, obviously there's some fundamental stuff that I've been following that, but at the end of the day, we use the charts as our guide, and that oftentimes gives us the entry point. So, if we're going to get a big sell-off, we'll see the sell-off, and then the media will come out, a week later and say, they'll tell you why the sell-off happened, but the charts tell us, if the sell-off's going to happen, so that we can potentially profit on it. Someone was asking me about Redfin. Okay, a lot of these like ARK Innovation Fund stocks have just pretty bombed out. ARKK. It's funny because I keep hearing about this lady and she just buys the dip, you know, and it's like, well, I mean, great, but I mean, you've been buying the dip. This thing's down from the highs, down what, 40%, 45%, so not good. This thing's at a support level. This is a level I had marked out, so you can see support, or sorry, resistance there. Then it was support. We haven't hit that until right now. Looking at the, yeah, and you got some divergence showing up. Let's go to the hourly. I'll show you this divergence. Let's see here. Yeah, kind of right there. Oh, this is just on the hourly, but see that? Starting to turn up there too, and it's, you know, there it is on the RSI. So you got some short-term divergence, probably good for a bounce here, I would think. Looking at the daily, you know, we're kind of at a good support level, some divergence. Look at this candle too. Again, all these techniques, you got to kind of combine them all to get your general analysis. But look at that candle, kind of a false breakdown candle, or a wick. So you broke down, everything was bearish, everything's, you know, collapsing, and then buyer stepped in and recovered. So that's pretty bullish, at least in the short term. And again, these things have been bombed out like crazy, so I don't want to short these things after, you know, after a 45% drop. The only one I want to short right now, just so you guys know, is Tesla, and I am short Tesla. Not a huge position. I got about, I don't know, 10 grand or so on it, but it can move quite a bit. So it, you know, if it starts working out, there's Tesla here. I've been really keeping an eye on that. See, Tesla is the one stock, and it's the major holding of the ARK Innovation Fund that hasn't sold off yet. And it's kind of the king of the meme stocks, I would say. It's kind of the king of the retail mania. It just was one of the first ones to really explode higher. So that's the thing, you know, if you're going to get a correction in the market, oftentimes they'll go, maybe you guys have heard this, but often they go for the soldiers first and then eventually they come for the generals. Well, Tesla's kind of a general. And same with like Apple and stuff. We just hit resistance right here on this trend line. I've had this red trend line for a while. We chopped through it once, but you can see right here, support right through there. We broke support. So that was a sell signal, proved to be a, you know, kind of a false sell signal. I mean, you could have taken the sell signal for a small trade. I mean, if you took it, let's say you took it at the close here, then you would have got about a 9.5% gain. And you had to exit on that support level, and then it never, you know, it just continued upward from there. But you can see this key level, we kind of chopped through it. It gets, oftentimes you can get pretty choppy around key levels. And yeah, we got rejected right there. So I think we're at a minimum heading down here, 909.66. But the thing is, usually when you head down to a level for the second time, you're going to start to break it, I think. So I think what will happen is we'll come down, probably get a little bounce. You know, they're going to fight to keep this level. The bulls, you know, they're going to see that as a key level of support, so they're going to step in and buy. And then maybe we'll get a little bit more of a muted bounce, and then she'll go. Just what I'm thinking. But again, big negative divergence. That was built. Well, I'm sorry, I take that back. Not really negative divergence here, because see, we never really made a new higher high. So that is a possibility. We might ramp up and make a new higher high. You have to be aware of both situations, because at the end of the day, like this chart's not my favorite because I don't have that negative divergence. So if I ran up and made a new higher high and put in that divergent high, then I'd like it even more. But so I'm close on the trigger with this one. You know, if it starts to ramp up, I'll just pull the trigger. It's profitable right now, and if it starts to ramp up, I'll just pull the trigger and get out, pull some profit off, and wait for that divergent high. Okay, guys, what else do you guys have? Yeah, real yields are going less negative. Yep, that's true. I mean, real yields are negative because you've got like the 10-year, I think it was at close to 1 3/4. I didn't look today. We can look at TLT. That's like 10 and 20 years. Yeah, so it's falling. So, the interest rates, the TNX is the 10-year, I think. Yeah, there you go. 1.73. So the 10-year Treasury, which is pretty much what everything's based off of, car loans, credit cards, mortgages, a lot of everything. The rates are all based off of this 10-year. Well, that's at 1.73. So those are going up. And, inflation's at, 6.8. We'll just go with the official reading. We all know it's higher, but just go with the official reading because that's what the market's going to use. It's just going to use the official reading. So less negative, although you still have negative rates. We're not going to get out of negative rates. I'm pretty confident in that. So I think the inflation trade, bigger picture, if you guys are looking for longer term kind of trend trading things, it's going to be this inflation trade. I don't see us getting out of it unless the Fed's willing to just collapse the market. And they've already proven many times they're not willing to do that. I mean, 2018, the market fell 20%. They stepped in, stopped cutting rates, or stopped raising rates and flipped the other way. COVID, market started to collapse. They went crazy with the money pumping. So why would they do all that and build the market up just to let it crash? I don't know. That's just kind of what I'm going with. So we're not looking for, I don't know. We could crash. They could. I think they're going to try to walk the market down nice and steady. That's what the Fed wants to do. They don't want things exploding higher. They don't want crashes. They want to just nice and steadily walk the market down. And if they're successful, that's what the market I think is going to do, is continue to trend down. But sometimes it gets away from them and then things just come crashing down. So the Fed loses control especially when things get crazy. AMC. Yeah, I actually covered that short that I had today. I had some AMC. It was up about 30%, and I covered it, and here's why. Right there. So I've got a level of support. You can see there, that was your former resistance, and then it was support once, and then we hit it again. I think we're going to break it, but, we probably will bounce here. So what I like to do, if we're falling down to a key support and you're short, why not cover right there? And look, if it continues lower and it's going to start holding, just take the short back up, re-short it. Yeah, you give a little bit up, but you get more of a sure thing. And then if you bounce and you really want to short it, you can re-short it at a higher price. That's a better entry for a short. So that's what I do. It fell down to support, cover, it bounced, and I'm looking for probably more. I don't know, it could bounce all the way up here, $30 or so. I'll just re-short it right back up there. I think this thing's done. These meme stocks like this one and GME, I think are done. So that's what I'm looking for. Look, divergences. Yeah, we kind of have a divergence too. Look at the hourly. Let's see if we can pinpoint that one. Kind of like that. I mean, we've made an equal low on this wick. As I zoom in, see that wick right there? So that was an equal low from that low, but higher momentum. So we've got bullish divergence on the hourly. So that's probably good, I would say, for a bounce up to this 30. This thing's, they're going to battle it out a little bit. Probably like this. Eventually, I think we're going lower, but that's what I like on that one. GME. This one, I'm looks like it's bouncing in the after hours, but this one is, we'll have to see. There must have been a news announcement. It's right there at support. You can see where it closed at 131.50. So I don't know. It's bouncing. We'll see where it goes. I think it's going to break eventually, but they're going to keep battling this right here at this level of support, 131.75. I think it's going to break. I think it's going to gap down. Maybe not tomorrow, but who knows? We'll see. But I think it's going to gap down pre-market. I don't think it's going to just sell down through this level. I think we'll probably, we're obviously bouncing here. This bounce I think will get faded into, and then we'll probably come down and hit this again or get close and then gap down. So I don't know. That's what I see on that one. Yeah, GME. Yeah, they're just pumping it. That's all it is. If they're talking about NFTs, they're just pumping this thing. That's all it is. It's this is just a whole pump game. That's all it is. All right, so, and that's why all this stuff comes out. They make all these moves in the after hours. They try to get low liquidity, and it's just manipulation around that. All right, what else do you guys got? XLK. Well, XLK is very similar to triple Qs, and this is the trend that I have. Some of these I haven't really visited, so I would have to kind of draw them up as we go. But something like that. Okay, so there's your longer term trend. And let's see, clear negative divergence. See it right there? So we look for the divergence to give us the conditions for whatever way we're trying to take the trade. So the conditions are lower momentum, which should, in the future, mean lower price. Obviously, you saw a big drop yesterday. It's probably range bound based. We're kind of, we probably need to take out these lows here. Something like that. And, 165. You take the lows out, and I would say it's, very, very probable that you're heading down to this trend line, 158 or so. And, from that trend line down 4 or 5%, that's where you'll likely see the bounce, because you can see, they've been holding this trend, and, you've got funds and stuff. They try to hold the trend. Okay, doesn't mean they will, but they're going to at least try. So expect some sort of a bounce down, wherever we get there. I think the bounces I think we're going to break this trend, but doesn't mean you won't get a bounce first. So what I like to do is trade this down to there, cover a short, let it do its bounce, maybe reshort it, and then look for the break. Or another way to do it is you can cover, and then you could go long. You could cover, flip long, let it bounce, cover, go short again, or just let it go long and then wait for the break of the trend line to reshort it. So, however you want to trade it around that key level. Uranium, yeah, maybe. Let's look here. SE. Is that C something? C Limited, yeah. I was looking at this the other day. Well, okay, that was my trend line back then, and just look for these divergences. They don't tell you when to short. They're not going to give you okay, I see a divergence, time to get short. That's not the way they work. The way they work is, okay, conditions favor a certain direction, right? So we put the probability in our favor, then we look for an actionable trade. You want to take trades when the probability is in your favor. It doesn't mean they're all going to work out, but let's put the probability in our favor, and that's what this does. So negative divergence, both things. Trend line there, and there's your break. So your original sell signal came here. Usually the way this market, because it's a buy the dip market, you're going to get a sell signal, and then they're going to buy the dip and run it against you. You just have to be ready for that. Don't let it get too far away from you, but at the same time, you could stay in that trade. So it broke, back tested once, twice. There's a clean breakdown. I mean, that's a very obvious breakdown, because, you already broke, you back tested, and then impulsively got rejected, and then boom, down she went. Trade's over, though. I mean, I don't know. It's not a short trade anymore for sure. I would never short something that's already fallen this much, but that was a sell signal. I didn't catch it. I can't look at all these stocks. 40% drop. So, probably start looking for a long on this one. Let's look and see what we got to that end. Yeah, I mean, look. Let me expand this. You're starting to get some bullish divergence. It's just starting to show up. It's there. There it is on the PPO. Sometimes you want to wait for it to cross over this zero line right here on the PPO, but because we're clearly in bear. I think we're probably due for a bear market rally. Let's just put it that way. This thing is likely in a bear market. I think it's probably started a bear market, but probably due for a bear market rally, which could rally us up to, you know, we just watch these key levels here. There's a level there. Let's see. Okay, sometimes if you don't get a super tight level, you can jump over to the hourly and then just tighten it up. All right. So, yeah, something like that. And, yeah, I like that. And the reason why I like that is it's got a reaction from above too. Reaction, 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 reaction. Okay, so that's the level that I like. So I would say this thing's setting up for a move up there to 228.40. And yeah, I don't know. It could be a breakout there. If I had to pick a direction, I'd say bullish up there on that one. It could run down a back test though. You get the back test, maybe that's a good opportunity. Looks like it's setting up for a bull market or a bear market rally. Okay, let me move on. Lift. Now, lift, look, it's pretty common. Everybody wants to short after the market's bombed out, and everybody wants to go long when the market's exploding to new highs. You almost have to train yourself to think a little opposite. You know, a lot of the time, and that's what these divergences do. They give you a heads up that the tide's about to change before the crowd realizes. So the crowd will continue to just buy price and buy momentum. And, you know, most of the crowd, they sell when things are panic crashing down, and they buy when things are exploding to the upside. The divergences give you a clue that, okay, that's about to change. Clear negative divergence that set up on that one. You know, we had a breakdown. So let's look at, we got to get closer now because we've already had, yeah, see, I don't know, I think we're still going lower. Rallied up to this level that I've had marked out, 45.90, rejected. You know, we're in kind of a range right here. So you break one way or the other, that's the direction I'd take it. But I'd say the probability is to break 43.50 and head lower, make another leg lower. And gap fill. I think we're gap filling. See this gap from back here? I've had it circled for a while. That's where we're going. I put the probability at least in the favor. So this could be a trade idea. You could short it, actually. But I don't know if I'd short it here. I would wait for a break of 43.50. Nice impulsive break. You'll see it. You'll know when it's there. And then, you know, it's going to work its way down. Now, that gap's very obvious, so I wouldn't look for a full fill. Just maybe enter the gap at 35. Once you start entering that gap, I'd think about covering if I was going to be short that thing. And that would be, you know, potential drop of, what, 20% or so. I think that's going to be it on that one. Then you'll maybe want to look for longs. All right, one more and then I got to go. SQ. Well, SQ and PayPal kind of trade the same. I thought it was going to be I thought these looked like they were about to have a bear market rally, but they never broke this trend line and they just rolled over again. So, let's see what my trend lines are coming up with. Oh, not that one. Yeah, so we're at a support line or very close. So maybe this is where the bear market rally, maybe wants to rally from here. I think it's due for a bear market rally. Clear, let me look at the daily. You got some bullish divergence here on the RSI. Let's look at the hourly on the PPO. See, so you got it. Bullish divergence. See how it's kind of turning up? It's on the hourly, so this can get whippy, and you know, but it is there. I'd probably want to wait. Let me go back to the hourly real quick. Kind of adjust this. I don't know, maybe something like this. Yeah, I'd go with that maybe on your hourly. So I'd wait for a break of that trend line. I wouldn't anticipate it. I'd just wait for a break. Nice hourly candle break. You start to break above, and that's probably going to set you up for that bear market rally, which target is probably up here, I would say. Could be up here. 193, 192.88. Okay, guys, I'll try to do, I don't have a whole lot of time, but a DK, let me do DKNY real quick, and then I'm going to wrap up after that, guys. Yeah, this is what I'm looking for. So, look, the point that I'm just watching, downtrend, I'm watching this on the daily, okay? I noticed the bullish divergence on the momentum indicators. So the setup is bullish, but we don't have an actionable trade. I need a break of this trend line. So if I get that break, then I'll trade it up to these resistance levels. First level, 30.60. Second level, 35.50. Next level, 44.66. And not the best levels, to be honest. So I would say 35.50 would probably be kind of your target, maybe your max target or minimum target, but right in there, 35.50. And from there, I would probably, at least tighten your stops, maybe pull the trade, whatever you want to do. That's the setup. So, guys, I'll try to do some more live streams a little more often. I'm getting a lot of more comments on stocks, and things are moving. There's definitely lots of setup. So that's all I got, guys. Leave me a thumbs up on your way out, and I'll catch you guys later.